Okay, this is going to be our FIFO LIFO average cost screen capture video. And for purposes of this illustration, we're going to use the Jennifer Jams and Jelly numbers in the inventory illustration tab. So, what do we have here? We have a product. What is it? Jennifer's Jams and Jellies Molto Primo strawberry jam in a 2-gallon container. And this is what happened during the month of January. So we started out with 7 units, we sold 4, we bought 18, we sold 16, purchased 19 and 6, and then sold 19. That's what happened. So first thing I want to do is to figure out, well, what do we have left in inventory? Well, we started with 7, sold 4, bought 18, sold 16, bought, and sold. So we get 11 units. We have 11 units left. Now this is not exactly nuclear physics over here, what I just did, but if we get this wrong, that's going to be a problem. It's going to throw off all our calculations. Alright, so now we have 11 units left, and then the question is, well, which 11 and how much did they cost? Well, there's several different alternatives, and there's 2 different systems. So the first system I'm going to go over is the periodic system. It's where you wait till the end of the period and then look back upon the transactions to determine the cost of what you have left. You wait till the end of the period and look back. All right. And now so that's the periodic system. And you have what? Cost flow assumptions on top of that. Are we going to assume that we sold the newest items first, the oldest items first, or do we use some kind of an average to figure out what we sold and didn't sell? Well, if you sell the oldest items first, which is the most logical cost flow assumption, that's called FIFO, first in, first out. If you sold the oldest items, what do you have left? You have the newest items. That's what companies typically want to do. They want to sell the oldest goods first. And of course, that would be especially true if you're dealing in perishable inventory. Now, it is possible that we could know exactly which 11 units are left. Like we might know that some of these are left and some of those are left, some of these are left. We call that specific identification, where you know exactly which items you have left. That would be probably most appropriate for an expensive inventory item, and this is not fall under that category. So, but if we were a car dealership, we would know. If we have 11 units in inventory, we would know exactly which 11, how much they cost, and a whole bunch of other information pertaining to those vehicles. Yeah? All right, so let's go forward. First, we'll do FIFO, which makes a nice little acronym, right? FIFO, first in, first out, which really means first purchased, first sold, the most logical. So for the periodic calculations, you want to construct this little chart here. Just using the numbers, we had 7 in the beginning inventory, which cost $22. Extended cost is $154. We bought another 18, $24. That's $432 extended. And then we'll drop in our January 9th numbers, 19 at 25. And then finally the last purchase, which was 6 at 26. So we have a total of 50 units here. We started with 7, and we bought 43 in total, giving us 50. And what do you get when you add what you started with to what you bought? You get what's available. We have 50 units available that cost a total of $1,217. Yeah? So these problems are all about, well, where is the $1,217? How much of that cost pertains to what we have left, otherwise known as the ending inventory, and how much of that cost pertains to what we sold, otherwise known as cost of goods sold. So, let's see, let's drop in our sales numbers here. Minus 4, minus 16, minus 19. So we come up with 11 again, okay? And now we're going to go forward. All right, so first in, first out means you sold the oldest items first. And what do you have left? You have the newest items left. So we need to find the 11 newest items. So we'll take 6 out of this batch here at $26. And we need another 5, so we'll take 5 out of this batch of 19 for $25. Bingo, $281, the cost of our ending inventory. What's the cost of goods sold? Well, if this is the total, right, you just figured out what you have left, you just subtract to get the cost of the items sold, yeah? That's how we do it. We just answered what? Questions 1, 2, and 3. Moving right along. LIFO. Makes absolutely no sense. You would not sell the newest items first. But let's make believe we did anyway, because we can do it for the calculation even though it didn't happen in reality. So if we sold the newest items first, then we have the oldest items left, yeah? All right, so we need 11. We'll take 7 out of the beginning inventory, and then we need 4 out of the January 3rd batch. 4, okay. Oldest units, yeah? 7, 4, 11. That's LIFO. Oldest stuff is left. Add it up. What do we get? We get $250 for the ending inventory and $967 for the COGS. Yeah. The observant student will note the COGS number is higher under LIFO. That will be true in a period of rising prices, which we clearly have with respect to our strawberry jam. So if you are filing a tax return, you probably like that number because that's going to give you the lowest profit and therefore the lowest taxes. All right, moving right along. You see, I don't like either one of those methods. I want to use an average. All right, let's do that. End of the period, we say, okay, well, we got 50 units available for 12. So let's calculate the average cost per unit based upon our available numbers. 1217 available, 50 units. What's the average cost? $24.34. One of the problems you have with average cost, which is a terrible system, is that sometimes you get fractions of a penny. All right, so let's go down and see how this works. Let's see, this is N10 and this is L10. Maybe it's down there already. Take our COGS number, divide by 50, get the same 2434, multiply times 11, 267.74. That's our ending inventory value. And we could do the same routine we did for FIFO and LIFO, which is what? Well, just subtract your answer from the available number and get your COGS number. And there is a double check, which I have down here. This 2434 pertains not only to the units that you have left, but to the 39 units that you sold. So if we multiply 39 times 2434, we get 949.26, which is the same number from the other calculation, which makes you what? Happy as hell. All right, so we just answered a couple more questions there. That's periodic. What happened? You waited to the end of the period and then look back on the transactions. For perpetual, we're making calculations on the fly as they occur. We're going chronologically down what happened here, chronologically. And when we buy something, we don't debit purchases, we debit the inventory account, which is an asset account. Let me go back to this totally amazing chart here. So when you buy something on the perpetual system, what do? You debit the inventory account. You don't debit purchases. Yeah? When you sell something under perpetual, you are making 2 entries. One to record the sale at the retail, yeah, and the other to record the cost of goods sold for the items that just went out the door, yeah, and relieve the inventory of the cost. So we're adding to inventory when we buy, and we're deducting from inventory at cost when we sell. All right, let's go back to our exciting chart. See what happens here. Inventory illustration. We got this handy little chart here. So we'll do FIFO first. We had 7 units for starters at 22 bucks. What happened next? We sold 4, I believe. Yes, we sold 4 units on January 2nd. Try not to do that too many times. It's giving me a migraine. Sold 4 units on January 2nd, and they must have cost $22 a piece because they couldn't have come from anywhere else. And what do we got left? We got 3 left at $22. January 3rd, we purchased 18 units. 18 units, $24. What do you do when you purchase? Well, since the costs are not the same, this batch is 22, this batch is 24, we're going to have layers of inventory. That's what they're called. 3 at 22, and then slap on a layer, 18 at 24. And there we have it. Now at this point, it doesn't matter which method you were using, LIFO or FIFO, because it comes into play when you sell units, yeah? And when you sell, you look back and you're going to pull out the oldest units under FIFO. And now I believe this is going to come into play on January 6th. What happened? January 6th, we sold 16 units. Which 16 units? Under FIFO, we're selling the oldest stuff first, yeah? So take the 3 at 22 and make them go away. So these are gone. And we need 16 altogether, so we need another 13 down here. They must come out of the 24 batch. What do we have left? These are gone, and we just sold 13 of those, so we have 5 left, $24. Okay, next on the hit parade, January 9th, we are going to purchase 19 units at $25. What do? Bring down what you already have, slap on another layer, and move along to the next transaction, which is another purchase on the 24th, a purchase of what? 6 units, $26. Now we're going to have 3 layers, 5, 19, and 6 at 24, 25, and $26. And finally, we get to the last transaction, and what do? Well, we sold 19 units on January 30th. So which 19 did we sell? Let's sell the oldest 19 units. We'll sell 5 at 24. We need another 14, so we're going to have to take 14 out of this batch, yeah? 14, 25. What do we have left? We have these 5 units at $24. I have to rescind that last statement. I don't want to do this whole video over again. What do we have left? These are gone, right? We just sold 14 of the 19. So we have what? 5 at 25. And then we have these 6 left. 6 at 26. There you have it. Okay? So we sold 19, we sold the oldest 19, 5 of these, 14 of those. When you sold 14 of those, you have 5 left. There it is. I got 281 for the final Jeopardy answer over here. And now if we add up this column, and the whole column, not just the last two numbers, which I've seen students do over the years, that would be incorrect. The cost of goods sold is going to be for the entire month here. It's $936. And if you add those two numbers together, if you add the 281, the inventory, to the COGS number we calculated, you get 1217. It has to be 1217. Remember, these problems are all about where is the $1,217? Well, we just figured it out. We got 936 and 281. Now, if you look to the left over here, we see what? 936 and 281. Got the same answer using the relatively quick and painless periodic system versus the relatively convoluted and painful perpetual system. Is that always going to be true? Yes, that would always be true. FIFO periodic will be equal to FIFO perpetual. All right, next on the hit parade, let's go to LIFO perpetual. And let's see, we sold 4 units over here, right? $22. And over here we bought 18 units at $24. So this is the point where we said in the FIFO calculation that everything was identical up to this point, up to January 3rd, where we have 3 and 18 units. That's where we're at. When we sold these 4, we only had this batch to choose from. So where is it going to make a difference? When we have a couple of batches to choose from, that will make a difference if you're using FIFO or LIFO perpetual. So what happened on January 6th? We sold how many units? We sold 16 units on January 6th. Okay. Which 16? So we're going to grab the newest items first. Did we actually do that? Probably not. But this is a calculation. All right. This is 3. We just sold 16 of those. So we got 2 of those left. 22, 24. And there we are. LIFO. Sold 16 of the newest items first. Got the older stuff left. Move on to January 9th. What happened on January 9th? We bought a bunch. Yeah. We bought. In fact, I'm going to copy both of these. Bought 19, and then on the 24th, we bought another 6. That didn't work out very well, did it? Okay. All right, so let me drop this in here. 19 units at $25. What do? You bring down what you already have. It's always good to use the right numbers. 19, 22, 24, 25. Then on the 24th, I think that's going to be another 6. 6 at $26, it looks like. Yes. 6 units, 26 are bought. I'm going to have to fix this later, otherwise I won't be able to sleep tonight. Just a little bit of OCD. Alright, which 6 are we going to sell when we get to that point? We'll see. So we got 3 at 22. We got 2, 24. We got 19, 25. 6 at 26. There we go. And then finally, the last transaction. We're going to sell 19. Which 19? We're going to sell the newest 19 first. So I'm going to take all 6 of these guys here. 26. I need 19, so I'm going to take 13 out of this batch. 13 at $25. What do I have left? I have 3 units at $22. I have 2 units, $24. And from this batch, I have 6 left at $25. Okay, so we end up with 11, which is a good thing. We got 39 sold. This is the sum of this whole column, yeah. This is what we have left. Did we get the same answers using LIFO periodic? And the answer is no, we did not. We did not get the same answers. Is that always going to be true? It is not going to be true every single time in the real world. But on my questions, it's always true. In other words, what is always true, you say? These numbers won't be the same. Why aren't they the same is really the question. So when we sold these 4 units over here on January 2nd, we deducted them from the beginning inventory because that's all we had to deduct from at the time. And we knocked down the beginning inventory to 3 units over here. If you wait to the end of the period to figure out which items are left, well, you're saying there's 11 left. I have all 7 of the beginning inventory. I have all 7 of these, and I got 4 of those, yeah? So the chronology of the events causes you to get a different answer under LIFO perpetual because you're knocking out units which under the other calculation, under the periodic calculation, are assumed to still be in inventory. Okay, so that's how it works. Let's see, what other exciting answers do we need? I think we answered mostly everything, but we get to number 12 here. What is the gross profit if all the units are sold for $40? Okay, so all the numbers we've looked at so far have been cost numbers, yeah? And the question then is, well, what is your gross profit if you're using LIFO perpetual and you sold all the units at $40? So here's our little calculation. We sold 39 units, so I'm going to take the 39 multiplied times $40. This number should have come down from that cell, and it did. That's our COGS number, yeah? So this is 39 units at $40. This is what we're saying they cost. Here's our gross profit, $607. And when these sales occurred, there was 3 different sales. Again, there would have been 2 entries. One to record the sale at retail, which in this case would be what? 4 times 40, be $160. And then we would, over here, we would debit COGS and credit inventory for $88. That's how it works. Okay. Hopefully you found this enlightening, and you would then be able to handle this problem over here, problem number 1. Until next time.